launching our Diwali special Samavat 2071 with perhaps the best and brightest from the markets. Madhu Kela of Reliance Funds joins in, Reliance Capital joins in. Madhu, thank you very much. Thank you very much for kicking off our Samavat celebrations.
Thank you very much for having me.
Actually, the day also seems very auspicious. We've got a mix of very good global cues and very good domestic cues. But, let me introduce a note of caution.
Sure.
Do you think this good bonhomie lasts? Are we going to once again see a new high before 2014 is out itself? Or do you think now for the remaining quarter you would be a little cautious?
Yeah, I would say, Latha, that is that's a message which I want to communicate, that, we are trying very, very hard to say where the markets are going to be in the next 2 months. While history has proven the returns are never being made in order to ascertain or understand where the markets are going to be in the next 1 quarter or 2 quarters. And I know so many people who are feeling really left out after such a big run which has happened in the markets, and now they are saying that, God, give me a little correction so at least I can be inside this great India story which is going on. So I think if you have a 3-month view, I don't know where the markets are going to be, but if you have a 3-year perspective, and equities is all about that perspective, then I'm sure picture abhi baki hai.
Of course, picture abhi baki hai. That's well put. But what is that 3-year picture? I mean, do you have a view of, say, 20% compounded earnings growth, which one brokerage spoke about earlier today, this morning? Therefore, what does that mean for the Sensex or for the Nifty? In 3 years, what are we looking at in terms of compounded gains?
So let's go one by one. I think here, first is, as in any investor, when you are investing, you have to look at what your comparative returns are, So I am very confident that over the next 3 years, equities will outperform real estate, gold, silver, and fixed income. Now that return outperformance, whether it is a 5% or 7% or 10%, I don't know that. Second, I think earning growth is likely to surprise many people over the next 2-3 year time frame. Again, right now, even consensus still is building somewhere around 15% earning growth, even for next 3 years. But you look at, all the policy making, as we saw yesterday was a big bang day for policy making. Once all this policy making comes together and give this year for that consolidation, I wouldn't be surprised if earning growth for the next 3 years after this year is even upward of 20%. Because we have had muted capex cycle, so the capacities have not been added significantly. And if the economy again starts to grow at 7-8%, then I think you could have earning growth of upward of 20%. That clearly not been priced by the markets as yet. Third, and the most important thing for outperformance of equity, जिसके घर में देखो सबके पास रियल एस्टेट तो है, सबके पास गोल्ड है, सबके पास फिक्स्ड इनकम है, लेकिन इक्विटी किसके घर में है, that you have to go and see. Even most sophisticated people in the market who've been wanting to take risk, their weightage is also very small. Let me just give you some numbers basically. We did some back up the envelope calculation that if 3% of the overall saving gets allocated into equity over the next 3 years, and if we cover up for the last 3 years, the equity flows upward of 2.5 lakh crores can come in the markets in the next 3 years. Now, I don't know whether that number is going to be 3% or 2%, but it is clearly indicating the last 3 months, the flows which we have got, even in mutual funds, that people are now finally realigning and realizing that they need to put some weight of equity in their portfolio.
No, I completely agree with you. I mean, if you looked at the mutual fund portfolio itself, from what around layman times, you were at 7.5-8 lakh crore. We are at 10 lakh crore. If you adjust it to nominal inflation, we are actually contracted as the pool of.
I told you 80,000-90,000 crore rupees of outflow has happened in last 3 years from mutual fund and insurance companies. This is an estimated number.
But and even if you make good that and come back to the 2006.
Normal 3%. We are not even assuming what is going on in America and in Europe, wherein the equities weightage is as high as 30, 40, 50%. We are only assuming 3% weight of equity in people's portfolio.
Okay. Before I come to which sectors you see doing very well, One more point on the macros. You know, the numbers and the performance of companies is not still giving you any
that's
hope.
Right. That's right.
I mean, we are still living in hope.
Yeah.
If you looked at the IIP numbers, even if you correct them to some one-offs, it still is like 1 or 2%. And what is worse, we spoke to Rajiv Bajaj after his second quarter numbers about the festival sales. Very tepid, very cold is how he put it.
Sure.
You know, when do you see that turn coming? Is it by end of 2014? Is it only in FY16?
Yeah. See, that point I take is a very well taken point, that the fundamental reflection on the ground is not yet there. You know, but we have to understand that, you know, we are coming out of a 3-4 year absolute challenging times. That, you know, not only there were the policy challenges within India, but there was even the external environment, what happened after Lehman Brothers, to a risk of trade generally. So I think these things will take a little bit time to correct. But I am sure, you know, the correction will also happen because of the markets. See, companies, once the markets become good, let's say you are at 8,000 Nifty, only because of your 8,000 Nifty, a lot of these banks which needs to get recapitalized will be able to capitalize. And we will get into virtuous cycle, wherein people will be able to raise money, restructure their balance sheet, and then earning kickoff will happen. So I think that might be maybe even 6 months. I would not argue that is there another 6 months for real ground situation to improve? There is a possibility. But what we have seen, early indication of improvement. Let's say even see the list of stuck-up projects which are being stuck for a very long period. Now that number has come down. See that now reshuffle finally we are seeing, even in the bureaucracy. So I am quite hopeful that 6 months down the line you will start to see the momentum in the real fundamental. Having said that, you know, will the market wait for these 6 months, or it will give you a small chance, small correction, it will coincide with global? That is entirely possible. But you know, typically when you are starting a big bull market, and this I think is that real big bull market, you see, last time when we made the bottom, that was at 51, 5200 Nifty in August of last year, and we are in October. There have been many reasons to worry in between. There have been ISI, there is ISIS, there has been Iraq, there has been local scare whether Mr. Modi will come, he will not come. There have been many, even state election, blah, blah. A lot of things have been there. But markets have not even corrected 10%, even once, from their highs which they have made. Now, this is a typical sign of a bull market, wherein, you know, there are going to be plenty of worries, and non-performance in the short term is one such big worry that, you know, numbers are not yet reflective. But this is the nature of bull market.
So it is smelling for you like the 2003 September moment or the 1991 moment? You have seen both those phases.
Yeah. I think it's not as compelling, to be honest with you, because in those times, you know, the valuations was really by your side. Markets were undiscovered. You could buy so many companies at 3, 4, 5, 6 P multiple. So markets are not as cheap or as compelling as they used to be in 2003-4. But in some sectors, in some companies, I don't rule out, you know, the kind of returns which were being made in that phases. Whether that will get repeated is possible, yes.
What's the money you will allocate to fixed income? There is a widespread feeling, and the global crude and commodity prices are helping, that inflation heads towards that 6% mark which Governor Rajan has been heading.
Sure.
Therefore, is there money to be made in fixed income over the next 12 months?
Again, what we have always been advocating, it is an allocation approach.
Yes.
Essentially, you know, just because now equities are in fashion, you can't just go now tilt and say that 100% of my allocation. I'm saying for a normal investor, for people like us, we have significantly overweight in equities because that's the only thing which we know and believe in. But for a normal investor, you know, it is still an allocation approach. So there will be some money which will be made in fixed income. But I would say if you are a person who is young and who is wanting to have a 5-year perspective, and I see one thing which I have not been able to understand, even when a young person makes an investment in the house, or makes an investment in gold, or makes an investment in bank deposit, does he call his gold trader every day? Does he call his property dealer every day? Does he call his bank person every day? No, they rarely call him, because we know that this is what it is. So when you're making investment in equity, that you have to have that perspective that I'm parking this money from a 3-5 year perspective. And if you don't, it's not a rocket science. You know, one of the guy I met who invested in our funds, he was saying that, you know, last 5 years he's been doing systematic investing, SIP, and he's generated 22% return, CARG, for last 5 years. Now, it's fantastic, you know, it's tax-free. So there is one point which I want to introduce here, Latha, is, you know, what people really get scared is of volatility. Yes. And if you really understand the difference between risk and the volatility, then you will be able to be in the markets. Because obviously markets by nature
How do you
are going to be,
distinguish the two?
that's what I'm saying, the markets by nature are going to be volatile. So as I'm talking to you tomorrow, something really untoward, unprecedented happens, you could always have a 5-10% correction. That is volatility. But if you have a 3-year or a 5-year view, and if my base case is that earnings are going to go 15 to 20% in the next 4-5 years, and if earnings grow 2%, that is the fault of my assessment, and that is a real risk. Yes. So as long as you can distinguish that there is a difference between risk and volatility. So to my mind, there is no risk investing in equities if you have a 3-5 year perspective today. But there will be volatility.
Okay, Madhu, hold on to that thought. We have to come back to you after this very short break with a lot more questions on sectors that you will prefer. Back in a minute.